Welcome back to another episode of the Wealthwise Show. I'm your host, Derek Johnson, and today we're going to be talking about credit. I think I mentioned it before, but I think it was along the lines of business credit, not necessarily personal credit. But thank you for joining me. Keep in mind, guys, that this podcast is meant to be used as education. So please use any information you hear as educational purposes for only. And remember, if you hear me say anything about a stock or whatever, that doesn't mean you buy or sell. That's just me giving an example. 9 out of 10 times, I don't give investment advice on this platform. If you I forgot what I was going to say. See, this is why I got to write this disclaimer down. Point is, education purposes, guys. Any opinions I have is my own opinion, no one else's. But we're talking about credit, so we're not really talking about stocks and bonds and whatnot, securities. And so today's episode is going to be about credit. Let's say you want to use credit, or you have used credit, or you overuse your credit. What are some of the things that can help you level up your credit score without going broke? That's the key thing. And so what we're going to talk about today is, but what is in a score? So we all hear about the FICO score. What does the FICO score mean, and how is it calculated, and how is it broken down? And so the FICO score is a score used by creditors or people who are looking to, see if your credit worthiness. They use that score to determine whether that should give you money or not. Plain and simple. And what goes into calculating that score is your payment history, credit utilization, credit age, new credit, and a mix of credit. So payment history is pretty self-explanatory. Are you paying your bills? If not, what's the history of you paying or not paying your bills? Credit utilization, I had to enunciate that one, is, are you using all of your credit? Now, some people might say, well, I got to max out my credit because I got it. Well, that may look a little scary to people who are thinking about letting you borrow some money. So keep that in mind. And why? It's because, if you are the type of person who used it all up, use your credit up. Let's say you had 20% in the beginning of the year, but by the end of the year, you're at 100%, and you're really not paying back, that credit you're letting it go month over month, paying the interest. That can look like, you're going and, got a little trouble going on in your financial life. Your credit age, how long have you had credit, and new credit? Are you seeking new credit? And then a mix of credit, it could be a mix of different loans, credit cards, different things like that, mortgages, auto, personal credit cards, things like that, mix. And so that's the lowest end. And so understanding those aspects of credit, your score, that can help you start building better credit. And so one of the ways that, the main way that you can help build your credit is by paying. Yep, simple as that. If you borrow some money, pay them people their money. Payment history is the biggest portion of factoring or finding out your credit score, your payment history. So always pay. Don't let a month go by without even doing the minimum. Preferably you want to pay the whole thing off, but I get it. Things happen. Life happens. I'm not one of those people who are snobby. How dare you not pay your credit card off? Like, bro, it was an emergency. Something happened. I can't do it. I could just do the minimal this month. Leave me alone. It's my money anyways. No, it's the credit card company money. But anywho, so you making sure you pay all the time. Make sure you want to keep your credit utilization below 30%. Now, some people be like, what? Then what's the point of having all the, well, remember what I said? So if you're using 100% of your credit and paying it off, that can be a little different. But like I said, if you're letting your debt carry over month over month and you're collecting interest, that's a little, alarming to creditors. And I'm speaking from experience, by the way. Yeah, there was a time where I had terrible credit. And there was a time where, had to max out some cards to stay afloat. But paying everything back, I made sure I do that. I made sure I did that. Yeah. So that's the idea, making sure that, if you have to use it, if it's an emergency and you got to max out some cards, that's completely different. No one's browbeating you on that. Do what you got to do to survive. But if you're just maxing it out because you got the limit, and you're like, hey, I got the limit. Let me go put, this Sapphire card on a Rolex. Maybe not the best idea. And so make sure you understand that, keeping it under 30% is nice because you're still using it. You're still building your credit up, but you're not getting so much in debt to where it's like, oh my goodness, I can't pay this off. And so you want to make sure you limit that. You also want to make sure you don't close old accounts. And the reason being is credit goes off your age. Not your age, but how long you've had credit, your credit age. And so you want to make sure that when you're using your credit, let's say you have an old credit card from Walmart from years ago. And you're like, I don't use this thing. Maybe use it every now and then. Even if you don't shop at Walmart, go in there and buy a t-shirt or something and pay it off. Like on sale t-shirt, something like $5 or something like that. And then pay it off quickly. Because what happens is your credit age is important. So let's say you close one of your oldest credit cards. Let's say you had that card for 10 years, but your newest or the card after that, you got 5 years later. So, if you close that, 5 years of that history is going to be closed. Now it's going to go off of the 5-year credit card you got 5 years later. So, you want to make sure that you keep one before you even open up a credit card. Make sure you're going to actually, keep it forever. Like I wouldn't just open up a card at every store like Macy's or JCPenney's just because they got a deal going on. Because you might not never go to JCPenney's or Macy's again. And so, I would stick to the banks, their credit cards, mainly because, you're going to be using those. And it makes sense. They have better perks. But, if you are younger, don't get trapped into all those, 50% off sales. If you open this credit card, 15 additional % off or whatever, because down the line, that store might close and some other stuff. Talk to the people who got some serious credit cards. They might remove them and put them with another carrier or another bank or whatever. But not for me. Where was I? Oh, and limit hard inquiries. And so hard inquiries are those inquiries that they pull your score. It's not a soft pull, it's like a hard pull. They want to see, the details, not just your score. That's a hard inquiry. And so when you go and see you're pre-qualified, typically pre-qualification is a soft pull. But, if you go ahead and put the application in, it's going to be a hard pull. And so if you don't know your score, if you don't know what's on your history, then I would not be trying to open up no kind of, use my credit at all, because you don't know what's on there. You might be like, well, I pay my bills on time, but you forgot about a card from 1995 or a bill from T-Mobile from, X, Y, and Z is on your credit, and you do that hard inquiry and it pops up and they deny you. So make sure you go to Equifax, Experian, and TransUnion. Those three bureaus can give you your report for free once a year. But if you pay for, by the way, not a sponsor, but if you guys want to sponsor me, as you can see, I am one of those minority business owners. No, what I was saying? No. Yeah, you want to go to those people, those bureaus, and make sure, you know what's on your credit history, what's on your credit report, but also find out your scores. And if you pay for Experian, you can really dig deep into all your stuff. And that way, before you open up a credit card. If you're going to use a credit, if you're not using it, then I get it. You have to keep up with it. You don't want to keep up with it, but you don't have to go and spend money on, figuring out, X, Y, and Z. Do your credit report. And then if you're going to use your credit, though, I would definitely make sure before you do that hard inquiry, that you're going to even get approved. And I know a lot of people say use auto pay. I say yes, because I have to, but I'm not the type of person that let people just, dig their hands in my account without me knowing. Yeah, but, go ahead and get them people your access to that account. And that way you can keep from, being late on payments. I am trying to make sure I'm on time on my payments. I make sure, my wife would tell you, it's in the calendar. I got reminders. I make sure I'm on top of it. I'm giving them the money. They ain't coming at me to take out my money. I'm going to give them my money voluntarily. But yeah, do what you want with the whole auto pay. But some of the great tips on credit card or credit building. Secure credit cards, to me, are important, especially if you're young. You're 16, you got a little job, you just started, putting some money in your pocket. Go ahead and open that secure credit card, put the $200 down, open it up, and use it responsibly to start building your credit up. If you're a mom or dad, go ahead and let that little boy or little girl who got her a job, make sure they got a job. Because I talked about in one of these episodes about income. If you don't got income, and so why are you spending money if you don't got no income? Why are you spending someone else's money when you got no income? And so make sure you got a job. If you're 16, 15, I think the age is 15 and 16. I don't know. Don't quote me. Make sure they, got a job, open up the little secure credit card, $200 down, and make sure they use it responsibly. And that way they can start building their credit up. Now, if you, my age in the 30s and, you got poor credit, go ahead and use that secure credit card anyways and start, being responsible this time. I'm talking to myself too. So I was irresponsible. Well, I wasn't irresponsible with my credit. What happened was me and my wife just got married. We were dirt poor. I thought, I got married like 21. I think she was 20 or 19, somewhere around there. I just turned 21 too. So she was going from 19 to 20. I was going from 20 to 21. And I had a job, but it wasn't hitting on nothing. And so I left that job to go pursue entrepreneurship. So I'm like, man, I'm about to, go get this bread. And I went and I started my own little pressure washing company. And my father was going to help me out with it. But, he didn't come through. And I was using my credit card to survive. I'm not gonna lie to you. I was paying bills with it. And I was buying food with it. Not like junk food, like groceries. And then I hit maxed out my credit cards. And I'm like, dang. And then ended up, having to close it down, go on my report and whatnot. And then once I got back on my feet and, started building, I went to carpet cleaning. Yeah, I used to work for this insurance company. I ain't gonna say his name because they might be around still, but I worked for this life insurance company, not selling life insurance. I was selling job applications. I was selling job interviews. So my job was to sit down in this room full of some other people who are way older than me, and we got paid for every person who came in for an interview. So we'll get a big old sheet and we'll call like 100 people on that sheet and try to get them to come in for a job interview. I ain't saying life insurance is a scam, but I ain't never heard nobody paying someone else to cold call someone for a job interview. So that's all I'm going to say on that. But then after that didn't work, I went on Craigslist and found a job, carpet cleaner. Did that for a little minute. I'm like, all right, start using that money to kind of pay down my debts. And the important thing about this portion of my life, I had to sell. I'm not good at sales. I suck at sales, especially when you're doing sales like I was doing with carpet cleaning, where I ain't gonna say you gotta lie, but there's a little bit of dishonesty in it, and it just wasn't for me. I couldn't do it. Didn't have the heart for it. So I started my own business. And that went pretty well. Up until 2019. Point is, I paid off my credit cards. Yeah. Started young, messed up my credit, fixed it. And so I get it. It happens. Stuff happens. And so don't be like, man, I don't feel like getting a secure credit card because that's for, babies. It doesn't matter. Do what you got to do to build your credit up so you can use it responsibly, so you can get forward. Because, even now, using my credit has been very helpful in building my firm. It's been very helpful with building, the businesses that I'm currently doing. It's been helpful for this podcast. So, it is a necessary thing for if you're building, but you got to use it responsibly. Responsibly? Yeah, responsibly. Responsibly? Oh, sorry. Anywho, another thing, some people say become an author user. I ain't going to tell you to do that. Don't put your life in these weirdos' hands. And I ain't calling the person you would, become an authorized user on weird, but you just never know. Let's say you go on with your friends and they have an emergency. They broke their leg. They can't work no more for 6 months. And they got to use their credit cards up that you own. So, unless it's your wife or your husband, I can see that, of course, but definitely ain't no one that you ain't procreating with. So credit is not scary. It's late. I'm not sure if y'all can tell. It's late and I'm struggling, but we're going to get through this. Credit is not scary. It's important, extremely important. And it's something that if you use it correctly, if you use it right, it definitely will help you build more wealth. But you got to use it right. And it's one of those things where, just like if you're in the stock market or anything, there's risk. And the risk when it comes down to credit is based on what you can handle. So don't be opening up these platinum cards with unlimited spending and you got a sweet tooth for shopping and you go, splurging and now you're over your head because you thought you had something coming up to pay it off next month. So that's not responsible. And so yourself, like I said, everyone's journey on wealth is different. My journey, your journey, all of us are different. So yourself. Do what's best for you and your family. And so with that being said, guys, I appreciate you joining me on another episode of the Wealthwise Show. I've been your host, Derek. I forgot my name. And until next time, guys, stay wealthwise.